Well, hello everyone. K Kim here from the Traders Club, TwoTradersClub.com. Let me just mute my phone here real quick. Hope you guys are enjoying your week. It's actually getting a bit chilly here in the Twin Cities. You can really feel that fall wind, that chilly wind. I actually kind of like that. I'm kind of a fall kind of a guy. Nothing that I'm saying I'm a romantic or nothing like that, but I just like that bit of chilly wind. I don't know why. Maybe because I was born in November, but I actually kind of like this weather. Though it probably not gonna stay too long, because the winter is probably gonna show up very abruptly here after a month or so. But anyway, I hope you guys are maybe in a more of a warmer climate. Maybe some of you guys in California, Florida. Hope you guys are enjoying this day. Obviously we're going to be looking at today we'll look at the market indices, just, trying to forecast where the market possibly be headed, or the sentiment of the market, trying to forecast the next few days and next week. Nothing really has changed since our last video. This midweek update video I've done last Wednesday. So we'll just see what are the levels to watch and things like that. Next Wednesday, I believe I can able to do a live midweek update. Feel free to sign up. If you just see the above this video clip, if you're watching it from my blog, you can actually you can see it above this video clip. If you're just watching on YouTube channel, then go ahead and go to my website there, and then if you go to what is that? If you go to on the right panel, I think it says, or you just click on a free webinar on the menu thing, you can able to sign up from there as well. So feel free to come by next Wednesday right after market close. You can ask me questions during the seminar or during the webinar, and you can just hang out with me there. So I think we're scheduled for that next week, and I'm sure I have enough. I think I have a space next Wednesday to be able to do that with you guys. But tonight, let's go ahead and look at the market indices here. So we're going to be looking at Spider, Dow Jones, Nasdaq, Russell, and financial as well. And I'll try to give you guys some sentiment of the market and some of the levels to watch. This rest of the remaining, we got 2 more days remaining this week, and so see, what are the levels to watch and things like that. And then if we have some time, we'll look at Tesla, Jazz, Comcast, Facebook, and Apple. So we'll go through them pretty quickly there as well. So looking at S&P 500, obviously something we talked about on last video. We said that, hey, the trend is up, right? The higher lows, higher highs. We talked about that. As long as the trend continues to cultivate and create higher lows and higher highs, benefit of Dow continues to go to the buyers. And something we really talked about, we spent a little bit more time on last Wednesday, was the fact that, hey, when we start to create new highs, it's not gonna just roll over. That's the thing about it, is what it could do is it could grind, right? We could grind for a while, right? And we don't know how long it could grind. When we made new highs here, we got up and we started grinding for a long time. How long was that? It was like 3 months or so. 2 months here. This was, I think, about 3 months. We may not see a smooth move. A lot of times these smooth bullish move happens at the bottom, and then what happens is you get turbulence. Because people are thinking, well, I want to start taking my profits, or I want to start short selling here and things like that. So you start to get some turbulence here. That's what we have been seeing last few weeks. But as long as we hold certain pivot levels, what I mean by pivot is many times the pivot becomes, what old resistance was becoming as a new support. That's a pivot, right? It's not just a resistance. It's not just support. It is becoming both. It's a pivot. Once we hit that level, the price change its direction, right? So that's a pivot here. And so what we talked about was, hey, and we got here, we created a new high. So any kind of pullback we may have, we are pulling back to potentially create higher low. What we don't know is where. So what are the level to watch? Obviously, we're looking at Spider here. This is a definite level to watch. What we don't know is this level going to hold? Well, today it looks like it held up. And obviously, one day does not create anything. It needs, basically, if you're doing candlestick analysis, you can look at this as bullish harami, or you can look at it. Looks more like a bullish harami there for minor term. Let me see. Yes, right on that 20 MA. That's the 20 MA right there. So we got a bullish harami. You can look at it as a bull hammer candle. But any of those candle and that candlestick analysis, what you need is friends. That's a bullish candle, correct? So you need bullish friends to come over and start condoning and endorsing its move, which means if we start to have friends coming over helping out, then you can really see that that was indeed bullish. Hammer or bullish harami. This was also bullish harami right about here. You can see that this was kind of a bearish candle there. We opened kind of a 50% of middle part, right? The 50% of previous candle, and we closed around that area. That's kind of what it did right here. So we have something similar. What happened was we had a friends coming over, started moving the price back up, and then we started zigzagging here. But then what we started doing was we started creating higher lows and higher highs and making this kind of a minor term, intermediate term, bullish uptrend / like a tight channel action, and that lasted for about 2 months. So and I'm not saying that's what's going to happen here. I'm not saying that that's exactly what's going to happen, but this bullish move could continue for the next 2 months here in this fashion, as long as we're above this pivot. And this is the level that we talked about last time, is that, hey, if 10 EMA breaks, right? So first level that you watch once they start to continue higher, when S&P 500 continue moves to the upside, what you want to look for is that you want to look for 10 EMA, see if that level gets hold. And that level held, but then it fell, right? And then what's the next level? It was 20 MA, you see? Because last time 20 MA did act as strong support. For 2 months it did, right? And then if that 20 MA is broken, what's the level to watch? Well, it was a 50 MA, because the 50 MA was acting as strong support here, here, and here. Well, that level was broken. When was the next level then? Well, it was 100 SMA. Do you see that how these moving averages can be very, very helpful? And obviously, you're not going to just blindly start buying when it gets to that level. You want to see it potentially bouncing, and you want to make sure you get a confirmation, and then you can start, buying the spider here if you want to go to the upside. So looking at this here, obviously we are holding above at this potential pivot level, which was old resistance, potentially becoming a new support. We do not know yet as of today that it is fully confirmed support, but it is looking pretty good for the buyers as of today with the candle that we have, which that level is coinciding with that 20 MA as well. So if we can continue higher next day, if we can have another bullish run, maybe something like this tomorrow, then I would have to say that, hey, there's a potentially this could continue higher to make new high. This could have been that higher low, right? So obviously looking at the intermediate term, primary term, a minor term, pretty neutral minor. When I'm talking about minor term, I'm talking next few days, next 3-4 days. It's pretty neutral as of today, but intermediate term, primary term, benefit out continues to go to the buyers, and there's nothing bearish about this chart here, because we're continue to illuminate and create this bullish environment with the higher lows and higher highs, and we perceive to have some kind of a long-term, this channeling action. Maybe I can drive from here, this long-term channeling action going on, and the question is, how long is this going to continue? And that is the biggest question for bears, and bears are just they're drained. They're just you know what I mean? They're just getting exhausted, waiting. And the thing about that is we don't know. This thing, all we know is this thing could last until next year. I mean, I've been saying that if I had to guess, maybe summer until next year. And that's another, like 10, 11, 12, 1, 2, 3, 4, 5. That could be another 9 months. And again, I don't know. As of today, I'm just guessing. As of today, all I can say is this thing could continue. We do not have any evidences, any tangible evidences. We might have all kinds of overlaying charts and all these indications, but we do not have a tangible data to concur that we're going to have a steep market correction at this point. We do not have a primary term lower high yet. Not on the spider, not on the Dow, not on the Nasdaq, not on the Russell, not on the financial. And I'll prove them a little bit. And I talked about it last week. So we have to continue to give benefit out to the buyers here. Let me just quickly glance at my other screens here. There's nothing really I can say. I mean, obviously, people, bulls can argue about this being overbought and all of that, but that's the thing. This thing can keep grinding higher like this. So that's why we put most weight on what we do here at the Traders Club. We put most weight on the price action. And everything else is subordinate. Everything else subordinate to that price action. What I mean by that is, let's say you got some evidences looking at some of the indicators, oscillators, or looking at some other overlaying charts, let's say maybe treasury bond or treasury yield, which I've been talking to you guys about. You found some evidence that potentially this is top, right? What you need is you need price action to condone that. You need price action to endorse that. If price action is ignoring that, then we cannot put a weight on that. Does that make sense? But let's say we start to see these potential market topping signals. We found the evidences, right? And then we start to have price action confirming or start to condone it, then there's a problem. Until then, benefit without continues go to the buyer. So definitely this level to watch on the spider. And let's say if that level breaks, 50 MA is definitely level to watch. Because 50 MA did act as support here. You can see that. So, you can see that we start grinding, we got up and pull back, 50 MA, 50 MA, 50 MA, and boom, right? So, and last time we had a very, very minor term support of 50 MA here. We got up, we pulled back. You can see that wick here. That means during the day, throughout the day, that was pretty volatile. It came down, bears brought it down and hit that 50 MA right on the dot and just brought it back up. So, definitely level to watch 50 MA there. Looking at the Dow Jones, nothing really different here. Obviously trend is continued to be to the upside, and obviously people want to call things all kinds of shenanigans all day long. So people want to call this double top. They want to call it double top here. Didn't work out. They want to call it double top here. Well, that didn't work out. They want to call it triple top here. Didn't work out. They want to call it a double top here. Didn't work out. They want to call it double top here. Didn't work out. They want to call it double top here. Didn't work out. They want to call it double top here. Appears to be possibly that was going to work out. Well, didn't work out. They want to call it triple top here. Really didn't work out. They want to call double top here. Didn't work out. You got the point. You got the idea, right? So people call stuff all the time, and this is a reason why I do not look through tweets. I do not read through blogs, and not in an arrogant way. Not that I just don't. As far as the way I trade, my trading style is, most people on the web, they're all very, very short term or day traders, and you guys know that I'm position trade. I want to get in a position for for 3 to 6 months, maybe a year. So it's irrelevant. So I don't. It's just a noise to me. So I don't. People call all kinds of shenanigans, and so I guess to me I don't recommend it. If you are longer term trader, I don't recommend you reading through all kinds of stuff, because what it's going to do is it's just going to hinder what you believe that market is going to do, and just going to be overloaded with information. But anyway, enough of that. So yes, double top, can't say that because it doesn't even look like a double top right now, and that double top to be confirmed, we have to break below that. So please, that's not what it is. Obviously, we are just holding that 20 MA. 20 MA hasn't been acting as strong support for Dow Jones. Dow Jones has been kind of get below that a little bit and just kind of zigzagging. It didn't, like Spider was that 20 MA did act as kind of a right on the dot support. But, and again, these moving average is not supposed to be used so that it's gonna bounce off of it like a textbook, like right on the dot. It doesn't do that. It's just a gauge, it's a reference, it's a guide for you to just look at certain levels. So I would have to say, we're at the resistance level, but benefit without continues go to the buyers because we've got so many support levels that it could continue, because you can see all these moving averages is a potential support. And as of today, I cannot say that there's any kind of evidences that we're gonna just do this. I think we're rather holding, and obviously we could, because anything is possible, guys. This is life, right? This is life. Anything is possible. Tonight I can go be driving and I can get in a car accident, but what is the probability of that? That's all we have in trading, is a probability. Anything can happen in trading. Anything, just like anything can happen to me tonight. So let's stick with the trend. Let's stick with the probabilities here. So I would have to say, hey, benefit Dow continues to go to the buyers here as well. The Nasdaq, the strongest looking bullish chart here, looking at a big picture. Obviously, we have very strong bullish move here. Higher lows, higher highs. We're dangling on that 10 and 20 MA here, and obviously if that 10 we lose, because we're just finding support on the 10 MA. If we lose that 10 MA, watch 20 MA, because 20 MA last time you can see 10 MA. You know how long we stayed here in this 10 MA for, like a month or two, right? Or probably a month. And then when we lost the 10 MA, do you know where we found support? At that 20 MA. So if we lose that fine 20 MA, unless if we start coming down even more, then potentially that 50 MA is definitely level to watch. Let me just look at my screen here if there's anything I need to look at as far as any indicators, oscillators, or nothing that it shows me that there's any kind of weakness here. And obviously, this market does not go straight up. When we get that, we get some kind of move, we're gonna move sideways, and it's gonna decide, is it gonna pull back or it's gonna continue higher? And that nobody knows, because we sideways and it continued higher. We had a little bit of sideways, we pull back. That right there, nobody knows. So what you do is you gotta continue to give benefit of doubt, and when it does pull back, you stay with your primary trend and intermediate trend, and you look for the bounces on some of these moving averages. So let's look at Russell. Man, I already spent 16 minutes. I don't know why time goes so fast when I do these analysis, because to me it felt like 3 minutes. I kid you not. I mean, I felt like I just sat here, I introduced myself and saying the weather was kind of chilly today, and boom, like 16 minutes. Anyway, I try to do these very fast. I mean, you should look at some of our member videos. I mean, they go up to 2 hours. Anyway, so Russell, same thing. People want to call all kinds of shenanigans. Right now, we're above. Okay, we got below, right? We acted a little bit. We got up here, we came down. So what do you think is happening? What is the higher probability at this point? Well, because we're all above all these moving averages, higher probabilities of them, they might be, because it went up, the higher probability, in my opinion, that it's coming down to create a higher low. And then it goes back up, because a lot of times that's kind of what it does. Comes down, create a higher low, goes back up. Comes down, create a higher low, goes back up. Can this do this? Yes, it's life. Anything can happen, right? But as long as we are above all these moving averages, you can see 100, 200. So that's a long-term moving averages there, crossing back up here. I have to give benefit of doubt to the buyers. And you know what? In a way, this is still higher low. These were lows. We create a higher low, we put on equal highs, and so I would have to say that this time around, when we go back up from this point on, I think that we can get to about 123, 124 there. In a way, though, it does kind of look like we're in kind of a channeling kind of a sentiment here. Remember, we saw that at Dow Jones, right here. That's what it looks to me. That's what it seems like. That's what it's doing. Big picture. You know what I mean? That channeling action. And as far as the sentiment is concerned, I think that's kind of what's happening in Russell there, that we're potentially just kind of channeling it out and just kind of doing this before, potentially continue higher. Or, I mean, it's going to decide what it's going to do. But, but as far as the intermediate term is concerned, I have to continue to give benefit of doubt to the buyers. Minor term, well, benefit doubt does go to the bears minor term. I'm talking like a few days, because we're below 10 EMA, but today's candle does look like, what does that look like there? Bullish piercing. That's a bullish piercing candle right here. What it did was, we opened right here, and then we closed previous days, 50% of 50% of previous days candle. So that what it does. So what that is, there's a bullish piercing. It pierced, right? It pierced the 50% of previous red candle. But that, again, bullish piercing, just like any technical analysis, what you want to see is, you want to see what did I say earlier? You want to see have friends coming over and start endorsing it, right? Start helping out. Then if we start to see this, then you can see that, hey, that bullish piercing started playing out, and this could continue higher. You got to remember, we had a pretty good hammer there, and then friends came over and started endorsing it, and then we continued higher. A lot of times hammer can fail. I've seen hammers form, and then they go up a little bit, and then just do that. And so any candle analysis, you just can't have one day. You can't put too much weight on the 1 day candle. You really need to see some follow through. And so I have to say, intermediate term, Russell still does look bullish to me. And if we hold this level right here, I think that level to be some confluence zone, or you can look at a pivotal level there. If we can bounce from then get above 10 EM, and I think get above about 116.67, I think that we can get back to about 121. Lastly, let's look at financial. And what we talked about last time wasn't a financial, was that, hey, all resistance and new support, it happened every single time, so why not now, right? It happened every single freaking time. I mean, the old resistance continue to become new support, old resistance. I mean, this thing failed, but we stayed here for about a month. We stayed here for about 2 months. That's the thing, is we are at that old resistance, new support area. How long can that stay here? Nobody knows. I don't know how long it's going to stay. So benefit of doubt continues to go to the buyers. All I know is that all we know is this thing can stay here for a few months before it's going to decide to continue higher or lower. A lot of times, these consolidation pattern above the pivot, it is actually bullish. You got to really... It actually favors the buyers. But what I found out in my research, at least recently, at least this year and last few years, that indices, like the sectors and the SPDR and Dow Jones, they don't like this too much. A lot of times, if you go individual equities, like if you go like, I don't know, like some Citigroup or maybe Goldman Sachs or Apple or Tesla, and individual names, and when a lot of times when they hold up like this, it's usually a bullish signal, and they usually have a higher probability it's going to break higher. But what we've been realizing that a lot of times in these indices, they don't like it. They don't like these consolidation mode. They consolidate and then they pull back. Many times consolidate, they pull back. This consolidation actually got up, but this consolidation pull back. This consolidation pull back. This consolidation pull back here. So it's important to kind of understand that, or have a keen eye for that, or remember that, so that next time we start consolidating, obviously we still don't know if it's going to continue higher or lower. We can say that, hey, there's a higher probability that we could possibly pull back, because that's what we've seen that it does recently. And so with that said, we can also say, hey, last several times when we stayed above this pivot, it stayed there for a while, so we can grind here and start moving sideways for, I don't know, who knows, like 2 months, right? And then while it starts to continue to grind, it is creating bullish environment. And in that bullish environment, individual stocks can do well. Certain stocks can able to do well. So I would have to say, hey, benefit out continues to go to the buyers, obviously in primary term, intermediate term, minor term, I would have to say, we did see some move today, but the follow through, if we see some follow through tomorrow and the rest of the week, or by end of the week or Friday, we potentially could have a good week next week. It's already about 22 minutes here, so let me go through these rather quickly. Tesla, Tesla, I have to say we're forming some kind of a bull pennant pattern, right? This is what I'm talking about. These pennant pattern, these kind of patterns, a lot of times it favors the buyers, especially after holding up a certain level, right? So I would have to say this favors the buyers. Can this fail? Yes, this is life, right? That's the theme of this video. This is life. Anything can happen. All we have is the probabilities, guys. Yes, anything can happen. Just because I said it's going to continue higher. Well, next day, this thing, 10K. Well, you don't know anything, right? And some people do that, I swear. Some people do that. But anyway, so I tend to ignore those people because they don't understand how this market works. Anyway, so I would have to say it holding up well. This thing can fail, but if we break out of this, we can potentially get to about 300, 310. And if you see my my article, the long-term article that I wrote back in June, that that my end of year target is 340. And for me though, personally, I went, I documented all that in my journal post. I went long there and I closed about 70% there. And then I closed remaining position right at the top there. And again, I was satisfied. It's not that I just knew that was a top. No, I don't even know if it's going to be top or not here. It just, I felt satisfied at that moment. So then I closed out everything. But I do think that we can have another leg up. Intermediate trend is high. We are getting extended. Again, doesn't mean it's because it is extended does not mean that it has to roll over, pull back. This move right here, that was rather, I would have to say that wasn't really a trend. It just was very very fast. We're making a bit of a trendy kind of a action. This is actually, I would have to say, much stronger trend than this trend. Obviously, even this here is not that. I do think that we're gonna have pullback before we get to 340. Probably another big pullback. I don't think it's gonna just go. It could. Again, why? Because this is life. Anything can happen. I'm just giving you the probabilities here. So I would have to say benefit doubt continues to go to the buyers. The 10 EMA continue to act as support. It acts as support here and here. If that level, we lose that level, what you want to see is this thing holding these two levels. And if this thing does pull back and it fails, what you want to see this thing coming here and hit that 50 EMA and gathering itself and go back up. But I would have to say intermediate term, primary term, even minor term. I guess minor term probably is neutral. Next few days is still neutral, but intermediate term, primary term benefit out continues. Go to the buyers there. Do I have enough time for these? All right, I'll go through them very very quickly here. Jazz. I mean, we were involved back in 147.69 ish. Again, we had to hold through this. We had to hold through all of that. We were involved right about here, and I documented everything. I'm not just saying it. I documented all of that, and there's a reason why I held through that. And you can go ahead and search for Jazz or go to my twotradersclub.com and watch the journal or read through journal posts why we held through that. And then this thing came back up here. And obviously we're position trading. I was in day trading. I was in swing trade. I wanted to position trade, which means I want to get into a more longer term position, which I want to hold 3 to 6 months. So I mean, we've been holding about good 3 months here. That's a good position trading. We filled this gap, which I've been advocating that probably is going to happen. And we filled that gap today, which is a good thing. A lot of times after filling the gap, there could be a potential pullback. If we do pullback, you want to see this level holding as a new pivot and possibly new support, and then getting back up there. So I'm still targeting about 190-ish, 185-ish before closing some of my positions, and then and holding the remaining. So looks very very good. I would have to say that you can say that this might be a bit extended, but we did put in pretty good size higher low, and then we got in higher high today, and that's what matters to me, is the higher lows and higher highs, because as long as we're on higher lows and higher highs, intermediate trend is up, right? Comcast has been flying, and we've been involved with it since 52.35 right about here. And that's the thing about it, is when you're position trading, I went long right about here, went long right about here. The thing about that is we got a gain, and then that gain was completely eradicated. That's what it means to truly become a position trader, because we are looking for much bigger gains. Something I always say is, if you want to make small money now, or if you want to make big money later. So and you know what, we had some members that they just got that move, and there was a good swing trading right there, but I held through it because I was going for something more. So we made new highs, right? Higher lows, higher highs, and this is higher high. And I don't, at this point, I can't say that it's going to continue, but if it pulls back, this is a level that we need to hold, which is that pivot level there, and potentially maybe 50 comes and then bounce back up. If we do that, we continue to cultivate higher lows and higher highs. My target about 50 at 59. That's where I'll be closing most of my position there. Facebook as well, we were back in involved about 66.17. We got up, and then quickly the earnings we held through that. I wasn't involved in it, but some of our members were, and they closed some positions, and then I say, hey, as long as we're above this level, this could be all resistance new support. We did that, and then follow the 20 MA, because 20 MA acts as good support right here. You can see that how just right under that 20 MA, 20 MA, 20 MA. You see that, and 20 MA. Isn't that interesting how that level continues to act as support? So that looks good to me until, and also we made new highs. Do you see that? Higher, high, higher, low. It's about 84-ish, 82, 84-ish. I think it continued to. Lastly, Apple. One thing we talked about last time is that we had what it looked here. What we had was, let me go here, and then I'll end the video with this. What we had was this. What I was looking at was this bearish divergence, and it's not here. Let me get rid of other ones and just look at the. Man, my videos maybe never go less than 30 minutes. I think last time was about 25 minutes, and and then the previous one's like 45 minutes. I try to do like 10-15 minutes videos, like, but I just can't. I don't know. There's so much to talk about. There's just so much data that I need to process through. But that's kind of what it is. That's the part of the game, is that there's so much data, and people think that technical analysis is just anybody can just have some crayon start drawing lines and you just understand. No, that's more than that. There's so much going on when you're trading with technical analysis. Anyway, so last time you can see that we grinded higher and higher, and then we started putting higher highs, which was good, and higher lows. The trend was up, but then what happened was, well, the MACD started putting lower high here, and then we started putting double top, and then things got a bit hectic here, right? We're seeing something similar here, and obviously the price action, which we have to put most weight on, we have higher lows and higher highs, and hey, nobody knows how long it's gonna grind. But what I have to say is, because we have this potential bearish divergence, something like here, that I think bulls are gonna try. Bulls going to try to put this get up. And today we had a phenomenal day, right? We had a great day today. You can see that bullish engulfing pattern. But I think we may get some good run here to maybe one of let's see, maybe 105. But I think there might be some struggle. I think there might be some struggle. We might continue to cultivate some sort of tight channeling action here. But see, what I can say is, nobody knows how long though. We can just keep doing this until end of the year. That's the thing. But with this bearish divergence in the picture, I am not sure if we're going to have this big thrust go to 120, 130, and just like everybody's buying, that buying friend. I don't know if that's what's gonna happen. I don't think that's what's gonna happen. And then, next few weeks, that's what happens, right? Life, anything goes, right? Anything can happen, but I'm talking about probability here. So in a probability wise, I do think that bulls are going to try to make effort, and today was a good day. But I think, intermediate term, I think they're going to struggle. What I mean by struggle is, I don't think they're going to completely tank, or they're going to completely demolished by the bears. I don't think that's going to happen. That could though, but I think there could be some potential pressure from the bears, and we could have some struggling moves. Though I think the trend is still up, so I think the bull's going to fight, and I think that's going to continue to happen. But I think sooner or later, if this thing this thing ready to play out, then we might get some pullback much lower than maybe 90, 92. And I'm not sure when that's going to happen though. When that does happen, make sure to watch 100 SM here. And last time we talked about that 50 MA, definitely watch that 50 MA. Well, that's exactly what we found support. Isn't that interesting? That kind of shenanigan, well, that's not a really shenanigan. That actually is good technical analysis to observe that, because for the fact that, hey, last time we found support at that 50 MA, it doesn't mean that everybody's watching 50 MA. You know that, right? Just because we're watching this line, everybody's watching that line, or everybody's watching the 50 MA, so that we bounce at that level. That's not what it is. What it is people, there's still a lot of times people trade with their instinct, their feelings, their emotions, right? So what they're doing is that, well, last time we pulled back this much and I bought it here and I made some money. And then we pull back this much, and then I bought it here, and I made some money. Those same people, when we get this pullback, I'm going to buy it again. Those people are doing it. And so because of that repetition, technical analysis work. Does that make sense? All right, well, hope you guys enjoyed this video. And if you guys have any questions, feel free to leave comments there if you're watching this through my blog, through that, or you can feel free to subscribe to my YouTube channel as well. Or next week, again, I'm going to be doing live midweek updates, so you can go ahead and sign up for that. Go to my blog, 2tradersclub.com. That's number 2, tradersclub.com, and there's a tab on the menu that says free webinar. You can sign up for that. If you can't make it, I do send out recording, but you do have to sign up for it to get that recording. So again, hope you guys enjoy this evening, and I guess we'll talk next week.